So, good afternoon, everyone, and thank you for joining us today. This is the third in a series of educational webinars hosted by RMC Wise, and this time it is in collaboration with Diligex and the Malta Financial Services Authority. Today's topic is the new CSP regime, one which is relevant as ever given the incoming deadline in 7 working days' time. With me, we have a selection of fabulous speakers. We have Stephanie Borsch-Caruana, a Senior Risk Associate RMC Wise. We have Glorian Gatt, Senior Compliance Officer RMC Wise. Matthew Ajus, CEO at Diligex. Jeanette Gatt, an AML and CFT Senior Specialist at Diligex. And Alison Cortes, who certainly needs no introduction, a Senior Technical Expert at the MFSA, and who has been central in the implementation of this reform. And on behalf of everyone, I thank you, Alison, for joining us today, considering your very tight schedule at this particular time. So before we start, I would like to set the scene for today's session. So the webinar will be for approximately 75 minutes, where in the first hour or so, we shall be discussing this topic with our panelists from a practical experience that we had in the past weeks, engaging with most of you here in the application process. And then we will leave the last 15 to 20 minutes for questions. The recording of this webinar will be available in the coming days on the RMC Wise website. So, as we know, the CSP regulatory changes are coming in force after 2 years of consultation by the MFSA, wherein the main change is the introduction of 3 classes and 2 under threshold categories. In addition, the new regime brings 3 key pillars, which we will discuss also today, which are regulatory compliance, risk management, and AML and CFT. And so we will be elaborating today on this. Matthew, I will like to start with you. We have been in touch regularly these past weeks, and as we assist clients in our separate capacities, we experience different reaction from practitioners as to whether they should apply or not. Can you perhaps share with us your views as to why it is important to submit the application by the 16th of May?
Very well. Thanks, Chris, and also thanks to all that have joined us this morning. So, Chris, as you rightly said, we've been very much in touch over the past weeks, and we've also been in touch with a lot of customers or CSPs, or previously, let's say, non-registered CSPs, warranted professionals or not, who have sort of been looking at the consultation and all the efforts that the MFSA has been doing on this topic for the past, now I would say, close to 2 years. So essentially, I would say that in essence, when we have the regulator here with us today, but when we look at the documents and then when we look at the communication from the regulator, essentially, Malta is trying to supervise better and to professionalize the sector. And essentially, this all started from a document which was called Raising the Bar. So essentially, that is the idea. From the business perspective, so from the operator's perspective, I would understand that the way one needs to look at this change is that this is not just so that I am ticking a box and I am fitting into the, let's say, the new framework, but the idea is what's in it for me as a business operating. So the idea is to professionalize the sector. It's not just to professionalize the sector as a whole, but if I am an operator, this is going to professionalize myself and also to make sure that the safeguards that are being put forward by the regulator are assisting me. So if I have my compliance function, my risk function, if I have my AML function, they are there to be able to protect the interests of my business and not just then, you know, the jurisdiction's reputation as a whole. So based on this, I would say, looking at the principles which One needs to discuss further, and I know we will be discussing them during this session. Essentially, the idea is that I need to make sure that my business or my setup is being looked at in a way that I am fit and proper, and that this is done on an ongoing basis, and also that all the legal requirements and the AML CFT requirements are undertaken, and that they are undertaken on an ongoing basis. That is the principle, not that I registered today, I filled in I tick the box. This is something which is, the idea is to instill a compliance, a stronger compliance culture across the board. Now I get to the real reason why we are here within, let's say, the framework of the deadline, which is essentially, the application deadline is essentially now a few days, a week and a half or two away. At the end of the day, I believe now we are at crunch time. So we've been in a lot of conversations with a lot of CSPs or formerly exempt CSPs as to whether they can apply, how they can apply, whether it is applicable. There was a lot of guidance, and I really would like to thank and commend even the regulator for being available even to us, to yourselves, Chris, and also to people out there, wherein sort of there was the guidance, there are the guidance documents, and there is still time to seek guidance. But I strongly believe that, as you rightly stated, Chris, now is the crunch time. So one needs to look at the 16th of May deadline as essentially being a deadline where I need to make sure that I have applied by the 16th of May. Why am I saying this? Essentially, once you apply, you are going to sort of go into the transitionary period. So the reality around us is that, yes, the way I have been operating up to the 16th of May may have been under what the requirements were prior to the 16th of March, to the publication of the legal notice which enacted these changes. But essentially, and I would like to make this point quite a clear point, if I wake up on the 17th of May and I am still operating, so I still have some directorships that I haven't concluded, I still have some, I'm still offering my office as the provision of a registered office. Essentially, whether it is because I only have a few, or I only have a couple, or one element or another, the reality is that I am going to be in breach of the law. And with that, the issue that I see, and why it is very important that everyone sets their mind now, it is no longer time to see sort of where I fall in and how I fall in. We should have already crossed that bridge. And if not, it's important that it is crossed this week, because the applications need to go in, because essentially the regulator, with the law as it is, which governs not just the regulator, but, it is the law now, it does not allow any space for the regulator to be in a position beyond the 16th of May to accept any application. So if I want to apply as a new CSP after the 16th of May, but giving the assumption that I'm not currently operating, in that case, I need to have everything in order then after the 16th of May, because then it is a fresh, new application. The transitionary period, allows the 16th of May as the deadline by which one can apply. And therefore, I cannot reiterate enough that the importance of applying by this deadline is essential to avoid being essentially, in breach. And that apart from being in breach, technically, it is an element that one is going against the law. So there's no two ways to go about it. And again, I repeat that the regulator does not have the facility to allow anything beyond that. So in order sort of to conclude, I would suggest that at this stage, there is the application on the MFSA website, and that one goes through that application, makes sure also sort of, what is applicable to him, and they make sure that they are applying by the deadline of the 16th of May, I repeat again, because that will put them in a position then that in order then to implement all the changes while they are observing the previous framework, it will give them the space to come in line until, let's say, there is a space of a grace period sort of 6 months, where you will be able to enter in a conversation with the regulator to go through the application sort of and see, you know, the regulator will be seeing, does this make sense? You know, is this based, you know, is this enough for the size of your business and for the nature of your operation? And that will be giving that allowance. So ultimately, that is sort of, you know, why I see this as very important, because, you know, one needs to make sure that you are allowing the regulator to help you.
Thank you, Matthew, for the intervention. Glorian, I turn to you. Matthew stressed the importance of applying by the 16th. Perhaps you can elaborate on the application sections and process, and perhaps share your experience with this.
Yes, of course. Thank you, Chris. Thank you, Matthew. So as mentioned by Matthew, the application deadline is the 16th of May. And basically, by this day, the CSPs will need to submit their application, which is in the form of an Excel spreadsheet and can be found on the MFSA website. And together with an application fee of €250 and the relevant PQs from the relevant individuals. Of course, this can sound a bit overwhelming, but once you actually go onto the application, and there is also, as Matthew mentioned, the guidelines from the MFSA, it is quite self-explanatory. Basically, the application has to be submitted through the LH portal. And basically you need to create an LH portal account, you need to apply, go and apply for a license, and there you will have all the steps that you need to follow. For example, in terms of the application fee, you will have the bank details over there. So you can upload as well the proof that the fee has been paid. Then in terms of the application form itself, as I've mentioned, you can download it from either the MFSA website or from the LH portal itself. In terms of the application form itself, it's split into 6 sections. So the first section, you have the applicant details section. So you would need, if you're an individual, you would need to upload your information over here. And if you're a company, you would need to upload the company information. Then in section 2, you have the current business. So here, for example, you would have to insert information such as the revenue generation generated from the regulated CSP activities and the jurisdictions being targeted. In section 3, you have the shareholding structure, group structure, and other interests, which is pretty self-explanatory. Section 4, you have to upload the principal officer details. So you have the directors, MLRO, and compliance, and if applicable, the individual taking care of the risk management function. Then in section 5, you have the regulatory history. So if you have any past, if you're an individual, any past being regulated, or if you're a company, if you have any history of being regulated, this has to be outlined here. And then section 6 is the declaration form. And basically here, if the applicant is an individual, they would have to sign it themselves. And if the applicant is a legal person, they would, this would need to be signed by 2 individuals. Then obviously we have the PQs. So in terms of PQs, it is important that the CSPs carrying out the application submit the PQs of the directors, the MLRO, and the compliance officer with their application, as this is what is being focused on in phase 1. Then in addition to this, we have, so in addition to the application fee and the PQs, applicants must also submit their business plan, business risk assessment, customer risk assessment, a draft of the memorandum and articles, and a draft client services agreement, which they are intending of using.
Thank you, Glorian. Earlier, I mentioned the three key pillars surrounding this new regime, which are the risk management, regulatory compliance, and the AML CFT function. Alison, perhaps you can let us know why the MFSA felt the need to raise the bar with respect to these, let's say, three key functions.
Okay, so if we start with the AML, which is the easiest and the most known, with respect to AML, when it comes to company service providers, we understand that this is one of the highest risks of these operators, and I wanted to make it clear that we are not trying to reinvent the wheel. So what is going to be expected from CSPs is to abide by the FIU, implementing procedures, the PML FTR, and the relevant requirements. What we will be doing is ensuring that AML is factored into the checks that a CSP will be conducting. So if there is a compliance monitoring program, there is an AML element, because obviously we understand that AML is an important factor, so we expect to see it there. With respect to the rules, also there is a requirement that CSPs adhere to AML procedures, but we will not be duplicating the work of the FIU. The purpose is to think of anything else on top of what the FIU requires. So AML, that's quite easy. Abide by the requirements of the FIU, implementing procedures, PML, FTR, whatever the law says. But we want you to actually take that into account, that you are abiding by those rules. Risk management is quite new to the CSP regime. There is no doubt, I believe, out there that the CSP area is quite risky. There is the NRA, there is a specific legal persons sectorial assessment issued by the NCC. It's a risky area. CSPs also have a very important role, in our opinion, of gatekeepers to the business of the jurisdiction. Reputation is vital, both for the jurisdiction and for yourselves as well, because we don't like that our operators are being mentioned in international fora in the wrong way. I mean, you might not have an impact on the jurisdiction, but even if you're in Malta, that is not something that we look favorably on, basically. So risk management, we always expected our CSPs to have a think about risks. So this is not something new. Maybe it was not that prescribed in the rules. So we thought of putting it down in the rules. And here I want to add that the rules are, it is a principle-based rule book. So if there is like the risk management function, it doesn't mean that each operator will have to adopt the same principles to adhere to this principle, basically. So what we're saying is, have a look at what we are expecting and think about your business model. And this is very important. I mean, we want the thinking process. That is vital in our opinion. We don't want people to just tick boxes. As Matthew said, I'm not going to tick the box, submit an application just so that I tick a box. Ticking a box will put a few positive points today, but tomorrow it might ruin you if there's a risk you're not thinking of. So the risk management function specifically, what we're saying is it applies to everyone. But obviously we understand that the business models are different. If you have an under threshold class B, will be different from an over threshold class A. The requirements are different. So the first thing that you have to do is think about the services you're offering, see what the risks are, and map them against the measurements and the checks and balances you have in place to mitigate those risks. With class C, because of the different services being offered, and because we know that there are some big operators, we requested that there is a risk officer. However, we also understand that there are CSPs, especially the current population, where the majority have a class C, I have to say, where there are even individuals who hold a class C. but they might be doing limited, even though they have a Class C authorization, they will be doing limited business, or they have very low risk. So in that case, we are allowing for a derogation if you can convince basically the authority that you have the measures in place. But how can you convince us basically that you have the adequate measures? You have to do the thinking process, because that's what we want. I can never emphasize that enough. And what you need to, the first question you need to ask yourself is, what keeps you awake at night? That is the first question you ask yourself. Get a piece of paper, list the points that keeps you awake at night. I hope that something keeps you awake at night, that because if you don't, if it doesn't, then we have problems, because you take all the risks in the world and you don't think that they are risks. So, and that is the thinking process we want to instill. And this leads me to the compliance culture, because with CSPs, I have to say there is a bit of, for some, lack of compliance culture. And the compliance culture, we think that it is vital, because if in the entity or the individual have a compliance function, then there is the willingness to do things by the law, to submit, documentation on time, and this compliance, that I want to be sure that everything is in order. And that compliance culture is vital for having good business. And the more we raise the compliance culture, I think in the jurisdiction, the better it will be for everyone. I hope it was.
Well, listen. So let's go in a bit of details of these three roles, especially from a practical point of view. And we have three, let's say, practitioners who are, let's say, conversant in risk management, compliance, and AML. Gloria, and I will start with you with vis-a-vis the compliance role from your experience. What is the role of the compliance officer? What is expected from a compliance officer?
Of course. So basically, the compliance officer forms part of the second line of defense of the company. And the role is twofold, that of oversight and advisory. So here it is important to note that the compliance officer role cannot be client-facing. In fact, something that was emphasized in the MFSA's rules and FAQs is that the compliance officer should not be directly involved in the onboarding process. So here we're saying that even though the compliance officer can be consulted, they cannot be part of the final decision in terms of onboarding. So they cannot decide whether the client is onboarded or not. However, the compliance officer can still provide feedback on the level of checks undertaken at the onboarding stage. And it is also important to note that the compliance officer should not be involved in the performance of the activities that they are required to monitor. Then, in terms of the role, the compliance officer role is basically someone, an individual responsible for all of the aspects of compliance. So they must demonstrate the independence of judgment. They must also familiarize themselves with any conditions upon authorization. So if the CSP receives any conditions upon authorization, they must ensure that these are followed, as well as abiding by the rules, regulation, and any guidance issued by the MFSA. Then, as I previously outlined, obviously the role is a role that has to be PQ'd, so you need to be approved by the authority to perform this role. And something that I would like to mention also is that the MFSA suggests in their FAQs that the CSP has a document that clearly outlines the roles and responsibilities of the compliance officer, so that it is clear what the compliance officer is responsible for.
Janet, I turn to you. I mean, you're the most experienced here from all of us. Janet, we speak of many policies and manuals when it comes to compliance. However, one key compliance requirement is the compliance monitoring program. What is this essentially? Can you perhaps share your experience in relation to this program?
Yes, of course. So the compliance monitoring program as such is not just AML. It involves everything that a CSP is involved in terms of licensing. What I used to do, and I'm speaking from experience here, is literally go through the laws and rules, pinpoint what is required from me as an MLRO and a compliance officer, jot them down in notes. I used to do a register, even an Excel register if need be, and plan your checks. So you have to have test sheets and do your checks every so often. Now the new rules, correct me if I'm wrong, Alison over here, states that certain checks need to be done at least every 6 months. So I'm presuming that the CMP, that the CSP will need to update the CMP every 6 months. It doesn't have to be all the checks, January and August. I used to spread them over the year, so that obviously you don't have a lot of checks in 2 months of the year. So what are these checks? Obviously these checks, if you get the rules, even from a regulatory perspective, and you read what the MFSA requires, for example, there are certain things that you need to notify in writing before, like, for example, a change in office address or material changes of the information supplied to the MFSA. There are other things that need written consent to from the MFSA prior to changing, like the name or maybe a change in shareholders. So I used to list everything in this register, go through the rules with reference to rules from a regulatory perspective and also from an AML perspective. You go through the IPs. Now there are the new IPs specifically for CSPs, which are helping a lot, even give guidance to the requirement, especially of the ongoing monitoring relevant to the service you are offering, which we didn't have before. Any EDD requirements, any PEPs in your business, and write down everything in a register and the checks that you will be doing every January, every February, every March, and so on and so forth. I used to back those checks with test sheets, and obviously any particular red flags will need to be in a company, obviously. Not if you're a one-man show, it's different. You still need to do the checks, but you don't need to present them to the board. I used to present them to the board and to any risk committees that you would have in your governance structure. So essentially, a CMP is checking that you are always in line with the law, always in line with the rules, and that even certain things, you know, for example, there is an update in the law, you will need to see that your policies and procedures are updated accordingly, at least review them once a year. So at least you have this register where all the requirements that you have as a compliance officer or an MLRO are listed in order not to forget anything. For example, I also used to list the licensing requirements. For example, end of year, you need to pay an amount for the licensing, for example, or when you need to file your AR or FS. Those I used to list them as well. Now we have deadlines as well with the new rules, different deadlines, and I suggest that those are also inserted in the compliance monitoring register so that each and every deadline is met.
Thank you, Janet. Alison, perhaps we can also spend a word on the personal transaction policy, which of course is related to the compliance officer role. What are the MFSA expectations in relation to this policy and in general vis-a-vis the compliance role?
Okay, so the personal transaction policy basically is another, how can I say, a more, not a really detailed, it's like the conflicts of interest policy, but when it comes to individuals specifically, because in companies we find that there are conflicts of interest policy, especially if you have employees, directors, and other people that are involved in the entity. But when it comes to individuals, conflicts do arise, you know, because you might be wanting to do a transaction, or you have been asked by the shareholders as a director to do a transaction which will create a conflict with something that you are actually doing, or in an area, or you can be competing with your own company. So what we want is like to have a procedure where, like, as an individual, what conflicts might arise, and do mitigating measures. I mean, mitigating measures, it's not like, we're not talking like a company like inform the compliance officer, blah, blah, blah. But here, basically, it's more tangible we're looking at, like if you have a potential conflict that you have to inform the client within a specified period of time, and then give the option to the clients. I'm just giving some examples here. So, as I said, think about what would be the right thing to do from a disclosure, transparency point of view if you come in this situation. With respect to compliance, Jeanette summarized it very well, the compliance monitoring program and the compliance work. Basically, what we're expecting is, like, when you're doing your homework, like, are you doing your homework in the correct way? So you need to check that, you know, when we were younger, much younger, and we're doing exams, first you do your exam paper and then you go and check that you have actually replied in the correct way, not went out of point. So this is the role of the compliance officer, you know, like somebody to check your homework. And you ask me, but why does it need to be done, especially for individuals? And we're going to have a lot of individuals now. I mean, even from the trend of applications being received, individuals are different. We are also telling that for the under threshold, these individuals can also be their own compliance officer. So here, the requirement is that you check your own homework if you're on under threshold. But why do you need to check your own homework? I mean, because you need to determine and test whether the measures in place are adequate, because it could be that you have been used to a system for 10, 15 years. It could be, I mean, it's very common, but the system, I mean, used to work 15 years ago, 10 years ago, used to be adequate, but with changing technology, changing things, risks are evolving all the time, you know. This system does not, how can I say, check for the adequacy of that risk anymore, you know. I mean, cybersecurity 25 years ago was not much of a risk because we were all working on paper, you know. But now it's a big risk that we need to think of and take into account. So that's what we're saying. When you are your own compliance officer, you need to say, like, this is what I'm doing. Is it adequate? So it's like, let's say every year, because if you have a small operation, we expect it to be every year. And as Jeanette mentioned, this is not something you have to do every December or every August or something. This is something you decide when you want to do, as long as you do it regularly. We don't want this to be a tick box approach that you do every June, for example, and then forget about it for 5 years. That is not acceptable, basically. But if in June something happens and a year later, when you were intending to do this check, I don't know, you had an influx of clients, very well done, and you do this check in July, for us, it's not the end of the world, as long as this check has been done. What we don't want is, you had an influx of clients in June, so I will postpone it to the following June, you know, another year. That is not acceptable, because that does not show a compliance culture and ongoing regularity of checks, basically.
Thank you, Alison, for your intervention. So now let's move on to risk, and then if we have some spare time, we can discuss the compliance role in more detail, or perhaps we can bring up the argument again when we have questions. So, Steph, with respect to the risk management function, from your experience, can you share your views on this risk function vis-a-vis the CSP? The new CSP regime, and what would the role of a risk manager entail?
Yes, of course, Chris. So basically, the main starting point, I believe, would be that the risk management officer, or otherwise the risk management function, would start by drafting the risk management framework. So, and this is going to be done in line with the nature, scale, and complexity of the organization, and as well in line with the business profile of the CSP and its risk appetite. Now, to begin with, yes, we mentioned risk appetite a lot, the risk tolerance of the organization. Ensure that this is being clearly documented within your documents, because ultimately you have to have proof that, yes, this is the risk appetite of the organization, and this is why I am accepting some risks. So basically, once you have done that, the risk manager and the risk management function need to build a risk-aware culture within the organization. And how can they do this? They need to communicate this enterprise-wide. And what are they going to communicate? The risk management process, and the importance of identifying risks in a timely manner. Like Alison said, we need to make sure that we document everything that keeps us awake at night, because ultimately this is going to be our potential downfall. And this is not something that you do once and you forget about. You have to clearly go back to it and review it on an ongoing basis. But just to give you a brief overview of the risk management framework, essentially. So you start with this risk assessment, right? So you start by identifying your risks, and this is the role of the risk management function, essentially. But it is not something they do alone. You need to communicate with all the heads of the departments, which we call the risk owners, basically. So they will essentially be the people in charge of identifying risks within their department. So once you have identified your risk, that is essentially your inherent risk. So you need to analyze these risks. And how do you analyze them? You see the potential impact and likelihood. And you have to look at this from both a qualitative aspect and a quantitative aspect. So how much am I going to lose if this risk arises? Once you have analyzed your risk, you need to evaluate it. And this is where you assign an impact score and the likelihood score. So here we have the inherent risks. You need to identify the controls and mitigating measures that you're going to implement ultimately, and you need to ensure that these control measures are being tested for efficiency, because ultimately it's useless having a control without it reducing your inherent risk. And this will lead us to the residual risk of the company. And that residual risk needs to be aligned with the risk appetite. Otherwise, we need to find another source of risk treatment, either through insurance, removing the business line, or adding additional controls, which are ultimately going to be effective in nature. Just as an outline to the kind of policies any risk management function needs to have. So this again depends on the nature and the size of the organization. We do not expect a large organization to have the same documentation that a small CSP would have, obviously. But to begin with, there needs to be a risk management policy and a procedure in place. So, and this needs to reflect your top risks, your processes, the framework as such, what I discussed earlier. We need to document the risk appetite. So this can either be done within the risk management policy or as a standalone document, depends on the organization, essentially. And ultimately the risk register. So this is going to serve as that central database where you include all your risks. And here we need to consider the risks that you are indirectly exposed to vis-a-vis your current clients, as well as those operational risks like cyber risk, operational issues, key person risk within the organization, business continuity. etc., etc. There's a lot of risks to be identified. Above all, the policy also needs to either make reference to cybersecurity or business continuity, or otherwise have separate documents for cybersecurity, information security, and business continuity and disaster recovery. But just as sort of as a way of advice for any risk manager that's going to take this role on forward, they need to ensure that they're being transparent with senior management and report adequately. So if someone tells you something, you need to have a transparent approach within the organization and ensure that you are communicating everything you identify and clearly documenting it in order to safeguard your CSP's interests ultimately.
Thank you, Steph. Alison, this is the next question is somewhat related to risk. However, within let's say a specific issue. I mean, can you kindly guide us? What will be expected from those who have limited business and have decided to terminate their CSP services following this? Let's say new regime, and therefore they will be winding down or transferring any remaining relationship. What would be expected from these? And with respect to the registered address, I mean, there are cases, as you know, where a registered address is still being used at the Malta Business Register, although a dissociation letter has been sent and all contact was lost with the client, essentially. Are these as well required to apply?
Okay. Thanks, Chris. It's a very, very popular question. Okay, so we are having a lot of queries from previously exempt CSPs that want to wind down the business. And we understand, I mean, there are two main issues. One of them, which you mentioned, Chris, is the registered office. When there is lost contact and disassociation letters were sent to the MBR. So even though the MBR accepts a disassociation letter, it still retains the address as the main registered address. This is something that is in terms of the Companies Act. So basically, disassociation letter is just acknowledging that the service provider is not happy providing this service, but it is still deemed to be the official registered office. We understand that the implementing procedures issued by the FIAU say that once the disassociation letter is submitted to the MBR, certain obligations from an AML point of view are not obligatory anymore, because obviously it's an issue of ongoing monitoring. The presumption is that there is no other transactions being undertaken. However, from the MFSA point of view, that is still deemed to be a service being provided. And the reason being that the MBR will not change this address. So if you have someone who has these kind of registered office, basically the options are that first of all, you need to try to remove that address, and then we'll start with the issue of the lost contact. We insist and say that lost contact is a widely used term. I have to say, I can tell you stories, but we'll be here till midnight about what happens with the reasons for lost contact. Non-payment of fees is not acceptable. Lost contact means you cannot get hold of this party. When we told someone last week that he needs a license because he had about 4 registered offices, and he insisted that he lost contact with this person this morning, I think around 11:30, he said he managed to contact them and removed the addresses because he did not want an authorization. So there are instances where this lost contact is used widely. So in actual fact, you can actually contact clients and get your address changed. If you are providing if you have limited registered office, what we're saying is 1, maximum 2, that is not deemed to be by way of business unless you are doing other services. So in that case, if you're not doing it by way of business, you don't need authorization. Our suggestion is, if you don't want authorization, is to approach the MBR. There are things that can be done. Obviously, these are at the prerogative of the registrar of companies, and unless the company is struck off, basically for us, you are still providing that service. So what we are saying here is that, first of all, I wanted to add that the MBR have been very proactive in trying to sort these issues in the past, let's say 1.5 to 2 years. So, I mean, somebody sent us an email yesterday and said, oh, the MBR will look into my email in 2 years' time. I mean, definitely not true. We are holding meetings with the MBR on a regular basis and with the FIAU, I mean, every week or so, and we're discussing these things and what can be done. So please do approach the MBR. What we don't want and what is not acceptable to the authority is comments like, oh, I've had them for on the lost contact list for the last 5 to 6 years. I mean, if they were there for the last 5 to 6 years, something should have been done before. So this is the kind of risks that CSP should think about. Offering a registered office on its own, sometimes it's seen as easy money. It is not. There is a big risk attached to it, which unfortunately many operators do not see. And they are suffering the consequences, how can I say, now? Because obviously, even if you were to terminate a current CSP authorization, you are not allowed to terminate it unless you remove all these offices. So please, I can even beg, take care of your lost contact list and of these registered office. And another situation is, another basically recommendation, if you are offering a multiple services to the same client, and basically you are a director, don't just go and submit your Form K and resign and then think that the registered office will just vanish or that will solve itself or somebody else will solve it for me. If need be, go for the solution, take action. You are director, you have the powers to do it at that stage. So don't just submit the Form K, think of the whole array of services you are providing. This is something that we've been asked about over and over again. We intend to issue some guidance, but there are some practical things that I can tell you, like take a deposit of 5,000 euros. I don't know, I'm just inventing things, to do the dissolution, because I understand if they're not paying fees, and I mean, why should you pay for the dissolution in that case? But do take safeguards. There are safeguards, but as I said, treat this as one of the biggest risks of not being able to remove the authorization, or that you have to apply basically at the moment with this new regime.
Thank you, Alison, for that very useful insight on this particular topic, which, as you said, is a very popular with practitioners. I mean, we're running out of time, but I would like to touch briefly on two last topics. One is the last pillar, the AML and CFT. Janet, I turn this to you, given that you have been also an MLRO as part of your engagements. Very briefly, what is this function? I mean, we have already been, let's say, discussing this even with the new implementing procedures for CSP. But can you elaborate on this function vis-a-vis the nature and size of the CSP business?
Okay, so when it comes to AML, let's make it very, very clear. If you have 5 clients or 5,000 clients, the requirements are the same. So you still need to have policies and procedures in place. You still need to do a customer acceptance policy. You still need to do a customer risk assessment. You still need to do a business risk assessment. You still need to register on CASPAR, on the FIAU. So it's irrelevant of the amount of clients you have. If you are a subject person, all the requirements under the PML-FTR and IPs and the Act itself apply to you. So the risk-based approach then is towards your clients, not towards yourself. So you need to do whatever is required as an MLRO. Even if you are a one-man show, you need to have an STR register. You need to have a process, what to do, how to do it, etc., etc. So you can have 5 clients, 10 clients when it comes to business to risk. You can have 5 clients that are high risk. You can have 100 clients that are medium to low risk. So there is no derogation or nothing that you can sort of not do if you are the MLRO and the subject person itself. Everything there is in the IP and everything there is in the laws in the PML-FTR and Act, you need to take on board. So as a subject person, you need to really understand the requirements, even because you are personally liable. As an MLRO, there is now the 250,000 personal liability, which is spelled out in the FIAU IP Part 1. I mentioned the FIAU IP Part 2 a bit earlier when I was talking about the CMP. Whoever hasn't read it or interpreted it, I really advise that you should go through it because it's very user-friendly. Usually the IPs are not user-friendly, but this one is very, very user-friendly. And it explains also, from an AML perspective. So let's not confuse the business risk assessment from an AML perspective to what Stephanie was talking about earlier on. There are 2 distinct and different requirements at law, okay? So they're different, totally different. Basically, I would really advise you go through even the annexes at the very back of this document, which gives also scenarios of what is expected, and even with reference to transaction monitoring. So if you're offering secretary service only, if you're doing registered office address only, what is required from you as a subject person in terms of AML, not in terms of other risks that Alison and Stephanie were mentioning before.
Thank you, Janet. And then perhaps you can also elaborate on this because I'm seeing a lot of questions on the business risk assessment. But one last question for you, Alison, and then we'll move on to the questions because they are increasing by the minute. Alison, some few words, I mean, very, very briefly, can you spare some words on the proportionality principle and also by the way of employment concept?
Okay, so the proportionality principle, basically what we're saying is that the way the rule book is structured is it is principle based. So each principle will apply to everyone. This is similar to the MLRO function that Janet was saying here, but we are adopting a proportionality aspect, meaning that for each principle, you need to do some thinking and say, how will this affect me? First of all, if you are an under threshold class A, the directorship section does not apply to you. Pretty simple. So that principle you can ignore. But the general principles, what we're saying is this. If you have, let's say, high risk clients, you're expected to do this and that from a risk point of view. But when you check your client list, you see that they're all very low. So in this case, you need to do a certain amount of mitigating measures to be able to mitigate the risks. But if you have clients coming from jurisdictions which are not deemed to be very reputable, obviously the expectation would be that you will have more, how can I say, robust measures in place. You check, that's when the compliance monitoring program comes in place, because obviously the checks once a year would not be sufficient. I mean, who would expect it to be every 3 months for certain jurisdictions? So the proportionality aspect, that is how it's going to be adopted. From an MFSA point of view as well, the application period closes on the 16th of May, next week. So please bear that in mind. I know that Matthew has said it over and over again, and the other participant, 16th of May. We cannot take any applications after that. There is a phase 1 and a phase 2. I'm sure that most of you are familiar. During phase 1, we will be focusing on the individuals and the low risk applicants. We have a risk system. Each time an application is received, it is automatically risk rated, and we're going to have if you have seen the application, you will see that it's a different kind of application on the presumption that you were already operating the business model. Rather than asking for a business plan, we indicated the figures and the information that we need. So once we will be authorizing the low risks and especially the individuals by the 16th of November of this year. For the other more complex, how can I say, business models or the companies or the consolidations, those we will be issuing a provisional authorization on the 16th of November. And following that, the applicant will have another year where they can operate with this provisional authorization. And obviously during that year, because earlier somebody mentioned that, I think Matthew, that if you apply by the 16th, you have 6 months to regularize, come to scratch with things. For the provisionally authorized, they actually have a year and a half. So, I mean, obviously, we would expect that you start thinking about this, like things like insurance. I mean, don't come to the authority on the eve of after the year and a half and tell me, oh, I'm not finding an insurer. I mean, start looking for an insurer now, you know, if you think it's going to be difficult. Start looking for banking facilities, start doing your procedures. Don't leave it till the last minute. But what we're saying is that that is the proportionality aspect. You can also see it from the application process guidance that we have issued, like PQs, you don't submit all the PQs together. Those that are doing consolidations or doing applications, we gave them an extra 2 months to submit the documentation. So the most important thing is that by 16th of May, you submit the application, and then you have another 2 months to look at the BRA, CRA, all the other documentation, because we understand that you have clients, you're doing a business, you're already operating. So obviously your focus will need to be divided. So that is the proportionality aspect we are doing. The other point was about the employment, about the arranging, I believe you're referring to, Chris, if I'm not mistaken. And basically here we're saying that you can arrange for your own employees only if you are a CSP. This was always the intention since 2013, but it was not very clear in the previous rules, and this is something that we clarified now. And the employees will not require authorization as long as they are doing the directorship or company secretary or services through their employer. If you have someone who is doing this service on top of their employers, holding themselves out to third parties, then an authorization will be required.
Thank you, Alison. So let's move on to the questions, because there are several questions. I mean, Alison, mostly will be, of course, addressed by you, yes. But of course will involve the others when it comes to more detail to the 3 key pillars. So let's start from these questions. Alison, here one attendee is asking, can you clarify whether currently licensed CSPs have to submit a new application? Can you also clarify what are the exact obligations of these current CSPs, and whether trustee companies have to register by the 16th? As my understanding is that this is not the case, and they will be approached by the MFSA.
Okay, so let's start one by one. Current CSPs that have a license, they should have received a letter from the MFSA with a class classification. We have undertaken this exercise, and rather than going back to the industry and tell them, where do you think you are? We have done this exercise, we classified everyone, we sent the letters. You will see the electronic signatures are at abnormal hours. I would apologize for that. But basically, we also gave the CSPs, I think, 2 weeks, and there were some that requested an extension because they were looking at their business model to tell us whether they agree or they don't agree. There are CSPs who are not agreeing or who would like to restrict their license further, so that, let's say we said they are Class C based on the previous application, but they indicated that they're only, for example, doing directorships, so they want a Class B. And there is a process, which is the CSP's off-site team, that they are dealing with this, so please do approach them. I'm concerned if there was a letter which was not received, please do approach the team. Or myself, you can approach myself and I will direct the question, but basically you should have received the letter about that classification. The obligations of the new rules will need to be adhered to by the 16th of September. That is 6 months after the issuance of the rules, but basically they are the PII, the risk officer, and also the capital requirement. With respect to the derogation, we are internally finalizing a document which we will be issuing about what information we would need from yourselves if you would like the derogation. With respect to trustees, trustees are completely exempt from CSP authorization. If a trustee is carrying out CSP activity, and they have been carrying out CSP activity in the past, there was an obligation to inform the FIAU. That with the enactment of Act 10 of 2020, basically since the 16th of March, that became the responsibility of the MFSA. So if you are carrying out, if you are a trustee carrying out CSP activity, you need to notify us. On the dedicated web page where you see everything about the regime, there is a notification form, a circular which gives you full details of what needs to be done. I think I answered them well.
Yes, thank you, Alison. We have another question here. Can an entity which is not currently offering CSP services apply before the 16th? And then one can decide whether to go ahead with this application or not. So, these entities, Alison, need to apply now?
They can apply now, but that will not be in terms of the transitory provision. So the application is different to what Gloria was explaining. That will be what we call the old application. This is the application also that needs to be submitted for those entities that are consolidating, because when I say consolidation, you have 2 or 3 individuals who wants to do a legal entity now and transfer all the business there. So in that case, what we're saying is you have to complete the old application. It is, if you look at the FAQs, there are links there. And what concerns me is that you haven't decided whether you want to apply or not. So I suggest first you make the decision, then submit the application. It's not going to make a difference because this is not a transitory application. So basically, you will not be able to operate until you are actually authorized by the MFSA.
Thank you. Here we have another question related to an intervention of one of the panelists. I believe it was either Alison or Jeanette. What is meant by arranging for another person to act as director or company secretary? Does this include the case where a CSP appoints individuals outside the organization to act in these roles? And what is the de minimis rule now as regards such as appointment?
I'll go, or Janet? Okay, so first of all, the de minimis rule does not exist anymore, full stop. It's been removed, it does not exist. So if you are doing CSP by way of business, holding yourself out, you need an authorization. There is no doubt about that. When we say arranging is when you have a CSP who is offering directorship services, but a client for some reason or other basically would like an individual to be a director rather than a company. So you can, what we call, arrange for your employees. As I just said earlier, in the old rules, there was kind of a loophole where the interpretation was not clear, where we understand that there are a lot of these people where you have CSPs arranging for outsiders to be directors. That is not possible any longer, and basically arranging you can only do it for employees now.
Thank you, Alison. So now with respect, so we have some questions with respect to the BRA. Perhaps Janet and staff can answer. So we have a question. So my understanding is that the BRA is the role of the risk management function. So having a proper BRA should satisfy the need to identify the risks of the CSP. Steph, now you can elaborate, but from my experience, Elizabeth, the BRA is not the role of any particular employee. It is a company-wide exercise. Wherein all...
Let me, if I may, say something about the BRA, and maybe then you and Stephanie can continue on the risk. The BRA, yes, like you are saying, Chris, it's a company document, and it's solely AML risk. So when it comes to the business risk assessment, in fact, you should have uploaded this document into the CASPAR under the subject person profile. This subject person profile is going to remain open all year round. So you don't need to specifically update your BRA with the REQ, which is obviously a much better flexibility. So you don't have, you know, REQ season in March, everyone, you know, panicking about how to do the BRA and do the REQ at the same time, and the AR and the ACR of the MFSA, etc. So the BRA should also be updated if there is any change in the business with reference to AML. For example, from a CSP aspect, imagine I never used to offer directorship services. Now I decide that I'm going to offer. So first and foremost, I need to update my CAP, my customer acceptance policy. So if first I had that I didn't offer directorship, I need to remove it from the CAP. Then I need to assess what AML risks, and we're talking about AML here, I can face if I am a director on a company. And then you need to see what risks you have, so that you result in the risk, we call it the inherent risk, the risk that I can have. Then I do the mitigants. For example, what can I do to reduce the AML risk? I can maybe accept only, for example, directorship services if I am a signatory on the bank account. So that will reduce the inherent risk, and so on and so forth. That is totally AML related. The risk function is totally different, and I leave that in your expert hands.
Yes, Janet, like you said, the BRA is completely AML focused. The risk management function is going to look at all the potential threats that the organization can face, essentially, and not just on the AML risks. You will look at the risks that emanate from people, the day-to-day processes, the operations. If you have key person risk, the IT infrastructure of the company, all these are going to be potentially logged in your risk register. So even the MFSA rulebook highlights what should be included in your risk register. So you have your client risk rating. What risk is that client posing by forming part, by offering it such a service? Then you're going to have the risks that you are indirectly exposed to. So as such, even reputational risk comes into it, not related to the BRA again here. And then the day-to-day, obviously, running of the business. These are all going to be risks that you're going to be including in the risk register. So just to emphasize what Janet said as well, there are two different documents that should be within the CSP.
If I may add something.
Sure, Matthew, sure.
Chris, just in relation to the BRA, Janet was giving an example of, let's say a trigger that, a lot of people think that we need to review it once a year. Yes, once a year, but if there are any salient changes, you need to review it to reflect the salient changes. One of the things that we are seeing at the moment is that there are a number of CSPs or formerly exempt CSPs that are in conversation with each other about the potentiality of either merging or passing on business, so on and so forth. That would definitely be a trigger to analyze whether there are any new risks, whether your customer profile has changed now, and also particularly if one is merging and there are different procedures that are going to come into place. The policies and procedures would need to be updated. If there would be a regulatory visit, one would expect that your policies and procedures reflect what's happening today on the, let's say, on the 20th of June of 2021, when not because your policies reflected one element and then you merged and that is not reflected in your policies because they haven't been updated.
Yes, thank you, Matthew, as well. Alison or Stephanie, for a Class C CSP, can the risk manager be the same person as the MLRO? And also, is there a particular number of hours per week on average expected from the MLRO?
You want to go, Stephanie?
I leave it in your hands, Alison.
Okay. So, yes, the risk manager can be the MLRO as long as it is proven that conflicts are being identified, any potential conflicts, and measures are in place to mitigate any such conflicts. There is no magic number. We always say this depends on the business model and on the risks and on how much work there is to do. Obviously, there is the minimum that you need to do. I mean, if you're expected to oversee the RQ and all the submissions, I mean, you cannot tell me an hour a month. I mean, that's not acceptable, definitely. But I mean, what we're saying is it depends on the business model, the amount of clients and all that. It's on a case-by-case basis.
Thank you, Alison. Steph, according to the rule book, the risk register, there should be a risk register via each client, right? Which should also include an inherent risk. Should this inherent or then subsequently residual risk be calculated similar to the residual and inherent risk as we know it in the BRA?
So this essentially depends on the methodology you're going to employ as part of your risk management framework. So if you're assigning an impact scoring or a likelihood scoring, you need to clearly document as to why you are giving it that number and what that number essentially means. So if you have an impact scale from 1 to 5, define those things that you're going to assign the scoring. The risk register needs to include, so your initial risk score at an inherent stage, so before you have any controls in place. You're going to list down the controls that you are applying to reduce your inherent risk, and this will leave you ultimately with the residual risk. So yes, you can follow the same methodology, but clearly justify in the risk management policy and procedure what these figures mean. So don't just throw figures within the register and not back this up. So clearly document your methodology.
Thank you, Steph. Now, I have a question here. I think one question many are asking is, what are the core differences with regards to one's obligations according to the different classes of license? I believe, Stephanie, this again goes in relation to, of course, what kind of services you will be offering and also proportionality in the size and nature of the business. Alison,
Yes.
perhaps.
Okay, me? Sorry. Okay, yes, you said it right. Basically, it depends on the services. You have to get each principle, think how it will affect you, and then basically determine that. With such questions, this is not a tick box approach. I cannot emphasize this enough. I can easily do three tables, one for each class or 5 with the under thresholds, and you just tick. But that will not be raising the bar and the compliance culture, the risk thinking or anything in the CSP area. It will be just ticking the box of a specific sheet. So I cannot stress this enough. This is not a tick box approach. Take the principles, think about how it will affect you, and adopt accordingly.
I have a very direct question here, Alison.
Yes.
Is it even possible to be a one-man show from now on?
Well, if you mean an individual having a class A or a class B over threshold or a class A, yes, you can be an individual, you can be a one-man show. But if for class A over threshold, class B over threshold, and class C, you need to outsource your compliance function.
And also, if one has just a couple of directorships, does one need to register as well?
Okay, so the first point is, are you holding yourself out? Are you providing these services to third parties? If the answer to both is yes, even if you have 1 or if you have 0, you need a license with the new act. When you say just a couple of directorships, then if you're not, first of all, if you are a shareholder in these companies, no, because that is deemed to be, you are doing this as part of your business, but please don't abuse the system with having 1 share. That's not deemed to be a shareholding. So because somebody actually asked me, he said, so if I have 10 companies and I get 10 shares, 1 in each company, that means I'm a shareholder and I don't need a license? No. So we might ask you for proof and everything. So unfortunately, we get these questions. So, and then if you say a couple of directorships, are they within the same group? Are you doing it as incidental to your profession or a service, you know, just because a friend asked you to be a director? I mean, I had someone who told me that pro bono for my husband's company, you know, I mean, that's her husband's company, so that will be like her company shareholding, you know. So we have to look into it. Usually the threshold is if you're doing it for 1 or 2, you're not holding yourself out and you're not offering it to third parties, and you don't say, hello, I offer directorship services, because we've had these cases. You might not need a authorization. However, I cannot stress this enough. If in doubt, submit an application, submit 150, the PQ. We will review it during the first 6 months. If you don't need authorization, we will give you back everything. So we will come to how to withdraw, we will ask you questions and all that. But if you want to continue operating seamlessly, please apply if you are in doubt.
Thank you, Alison, for the clarification. Now, we have also one question. Can you explain the obligation of CSPs of putting in place a bank guarantee, pledge, or money at the bank? Is this required to be in place simultaneously with the application or a little later stage?
Okay, so with respect to, first of all, by the 16th of May, you're not obliged to have this capital there for us to see it on the 17th of May. So as I said, the important is to submit an application, fee and DPQs. But if you are under threshold, basically, first of all, there is this misconception. You don't need a guarantee and cash at bank. If you have money in the bank, that is sufficient. You know, the guarantee is an alternative for those, let's say, young lawyers or accountants. They don't have maybe that amount of money. They would prefer to have a bank guarantee. But if you have 5,000 euros in a bank account and you're going for an under threshold class A, just show us the bank account, make sure that it's always there, and that's fine. So what we're saying is you have to abide by all the rules and have everything in place once you are authorized. So if you are an under threshold or an individual who is a low risk and you will be authorized by the 16th of November 2021, that is the date when you need to have everything in order. Okay.
Thank you, Alison. Steph, I have here one particular in relation to business continuity. When an individual CSP under threshold B needs to consider business continuity, does this, for example, include the sickness or traveling? Also, if you ask someone to step into a board meeting instead of you, right? Because you cannot join for various reasons. Is this considered outsourcing? And what is it is considered again outsourcing if it will be the norm and not like a one-off?
So basically, in relation to business continuity, what I believe, even from what Alison mentioned during the webinar today, what the authority is expecting is that if you are one person or a directorship, for example, what the authority is expecting, and Alison, again, correct me here if I'm wrong, is that they want these individuals to think of an alternative. If you cannot be present to a directorship meeting or whatever, there are other ways to communicate. So if you send an email, for example, and you clearly document any decisions made. So I believe we need to look at business continuity more as, okay, look, a disruption to your service offering. So have a plan in place. So just in case someone cannot attend a meeting, perhaps we can change the date. Perhaps we can document a decision via email. So there are other ways how can this can be addressed essentially. But again, Alison, feel free to correct me here.
If I may add, with respect to directorships, I mean, we understand that this is not simple. This is not like if you have a big structure and you're a director, I mean, and you propose, I don't know, Christian, you know, here, they would want to tell you like who he is, you know, who is he? I mean, we don't want him, you know. But what we're saying is that you have to think, if you have a directorship and you're the sole director and something happens to you and you're out of action for 6 months, let's talk about COVID. Let's say you have a bad case of COVID. What's going to happen? You know, directorship is a bit of a particular situation because obviously, as I said, with big boards, I mean, there are the shareholder, there are the directors who can take over, you know, it's not that you are the most vital person, but if you are one director on one company, that's something different. And this brings me back to what I've been saying, repeating over and over again in my sleep as well. Think about the particular situations.
Thank you, Alison. Janet, I have a question for you. Can you kindly repeat which guidelines you were referring to as they were user-friendly?
I think when I was referring to the FIAU IP Part 2 for corporate service providers, so they're not guidelines, they're IPs. So you have to consider them as laws, but for me, they're very user-friendly. Even the scenarios they explain, they tell you step by step what is expected from you, even with reference to transaction monitoring, especially.
Chris, maybe what we can do is we can then maybe share the link, but they are accessible on the FIU website, but maybe we can share the link directly. If I may just interject, Alison, because some members have a message just to re-clarify, just to understand, to make sure everyone understood correctly, on the question earlier on the under threshold, whether they can sort of be the compliance officer, or on who needs to outsource. You made a statement there. Maybe you can re-clarify it so that everyone is 100% clear.
So the rules basically allow that if you are an individual under threshold, so let's start from there. If you are an under threshold class A, you can be an individual or a civil partnership doing incorporations only. If you are an under threshold class B, you are an individual. So the majority will be individuals. You can be your own compliance officer. We will be issuing guidance, and I was thinking even like pro forma kind of checks that you should at least check, or some form of document. You will, originally when we issued in December the rules, we were saying that you will need to engage a third party. We created some furore there and we revisited that. So what we're saying is you can be your own compliance officer because we deem you as being lower risk. However, we expect you to do the compliance checks. We will provide some guidance, examples, but I mean, this is something that will come in the near future, hopefully. But you still need to carry out the compliance checks, but you can be your own compliance officer. I hope it's clear now.
Thank you, Alison. In relation to this, given that we now brought it up, I have two questions in relation to the risk officer. So the risk officer, we know that it can be the MLRO, but can the risk officer, let's say, assume the three functions, so risk officer, compliance, and MLRO? And class A, does it need a risk officer? This is of course no, but what should be in place for class A also to make sure that from a risk management perspective, they are in line with the new regime?
Okay. So first of all, whether we can have the MLRO being the compliance officer, being the risk officer, obviously this person will be wearing too many hats. First of all, we need to start whether it's an individual, because obviously if it's an individual, the compliance officer the compliance function needs to be outsourced. So they cannot be the same person. If it's a company and you show us that this will work, that there are the divisions, the conflicts, the measures in place, then we will consider it. This will be on a case-by-case basis. But what I wanted to say, it's a bit very unlikely that the same person can wear three hats, because you have the client, the compliance officer who cannot be client-facing. And then we have the risk officer who will be doing, some different work. So it's a tricky one, but we will consider it because we understand that there are different business models, and it could be that the way that you are accepting clients means that there are adequate structures in place, or you have a big group behind you who have other structures, so we will consider that. But as I said, especially the compliance officer, we need to be very careful. With respect to class A, as you rightly said, Chris, there is no requirement to have a risk officer or a risk derogation. But as I said earlier, what keeps you awake at night, get a list, get a piece of paper, list the problems. With the under threshold, basically, those are only allowed to do incorporations. So basically, is this incorporation being done for a lawful purpose? It's a one-off transaction, so the obligations are even more limited. So those are the risks. The risks there basically will be AML, what we're saying here. I mean, obviously, rather than the cyber security misuse and all that. And obviously, there you have a bigger gatekeeper role, because obviously you're doing incorporation, you're bringing the business to Malta.
Very good. We have some few questions on the registered office. With respect to the registered office, the FIU previously mentioned that when once the subject person dissociates from a client, the subject person AML/CFT obligation ceases. Is this not correct? Also, if a client is not paying the subject person fees, is that not justifiable enough to dissociate from the client?
Well, the FIU, from their perspective, when there is a disassociation letter, they deem it not as terminated, but you have certain obligations in terms of AML that you don't need to comply with. So it's not that they're saying that it is okay, sufficient, but the way, if you see the wording of the implementing procedures, the one that Jeanette spoke about, basically it says that if you send a disassociation letter because you lost contact, how can you obtain an updated ID card? You know, obviously certain aspects are not there. For the MFSA, it's different because we're saying that your address is there. So there is still other risks rather than the AML, reputation, legal compliance. I mean, what if the police come knocking on your door because the address is yours? And we've seen these in the past and experienced firsthand, basically, with some license holders. What was the other question, Chris? Sorry, I forgot.
It's okay. Let me also
the fees, whether it's justified. Well, from a regulated person point of view, it's not deemed to be sufficient, because if they don't pay you, you cannot assume that it is lost contact. If they are not paying you, you can still contact them, tell them to remove the address, take action, I don't know, legal court fees, court action. But I mean, you cannot just say, oh, he's not paying me, send a disassociation letter. That is taking the easiest way out, basically. And I know it's might be ideal, but it will not be a terminated, deemed to be a terminated relationship. As I said, the address will still be recognized. If there is a court order, anything, they will come to your address. So if you don't remove the address, that company will, the address is the official address of that company. So from a reputational and from a holistic view of risks, it's not sufficient that they don't pay, basically. We understand that you're in business and you want to be paid. So that's why we say that registered office is not such a low risk, how can I say, service, and you should have measures in place to mitigate these risks.
Mm-hmm. And perhaps this, what you've just said here, Alison, is exactly the next question, because an attendee here is asking, how can we still be responsible if, of course, they did not change their address and they terminated, so to say, the service agreement?
But who terminated the service agreement? You terminated it or they terminated? Because if they terminated it, obviously they will be changing the address. If you are terminating it, why are you terminating it? Because you've lost contact? I mean, the law is the law. The MBR will not change that address. Officially in Malta, that is the address. I understand it's a very difficult situation. There are other measures on how you can, but it depends whether this company is active or no, because obviously if it's active, I mean, it's in their interest to change the address. So you have to endeavor to make everything possible to change that address, basically. I know it's a kind of a situation, there isn't a magic pill that will help you like anything else in life, but this is a situation that we see all the time happening, unfortunately.
Thank you, Alison. Steph, we have one question in relation to risk measures vis-a-vis registered office. So for a registered office, what kind of risk measures are recommended to be taken, given that, of course, the registered office will still be shown on the MBR website?
So from this end, basically measures and mitigating actions that one can do, perhaps maintain a close relationship with all your registered office clients. So that would be the first starting point. And do you want to take such a high risk? Do you want to offer such a high risk service essentially? And secondly, so what you can do perhaps here is that you can have procedures in place to maintain that close relationship with this client so that contact can be kept on an ongoing basis, and obviously keep reviewing the client on a frequent basis.
Thank you, Steph. The last few questions here, because we're really running out of time. Alison, for a Class C, the share capital of a company can be increased to 25,000 during the 18 months provisional period.
Yes, if you are going to apply for during the transitory period, basically, the capital will need to be in place by November 22, basically, unless we are super efficient and we give you a license before.
Thank you, Alison.
Chris, that we're going to be super efficient, but with the amount of applications, it will be November 22, most probably.
Sure. We have another question here in relation to the Class A threshold. I believe we already answered this to some extent, but apart from the risk officer, Alison, are there any other exemptions based on proportionality with respect to this Class A?
Well, there is the section about directorships, because you're not offering that. There is no requirement for a PII. The MLRO and the AML, those are the same exactly, so there's no distinction. And obviously anything which is like, I don't know, ongoing obligations, because it's a one-off transaction, the incorporation, that will not count. But as I said, it's all the principles, and to tell you the truth, some principles are good to have. So think about them, do some minor changes, which, I mean, risk, we should not see it as an extra or compliance, you know, it's vital. So it's in the interest of yourselves as well in the end. So if there is something that you think, oh, it's a good idea, maybe if I do this little bit, I mean, it will save me from other problems, you know. So have a look at the rule book, and as I said, no checklists from our end.
Thank you, Alison. Well, I mean, this question was already dealt with, but if you have any additional thoughts, Alison, my understanding is that a small partnership with two partners can have the MLRO and the compliance officer be the same two partners, as they would still do the client facing. Is this correct? If not, what does the MFSA expect from these entities?
Okay, so if you have two partners and there is the dual control principle, which is embedded in the rule book, the law, and everywhere in financial services in Malta, basically, obviously the two partners are part of the 4 eyes principle, the dual control. So they will be involved in onboarding. They should be, because if we come and during 2 hours supervision we don't see it, obviously that's a breach of law. So basically, one of the partners can be the MLRO, that is okay, but neither of the partners can be the compliance officer, because the presumption is that they are client facing, because obviously they need to onboard clients and be involved in that process. In that case, you can outsource the compliance function to an individual or to a company who will appoint an individual, and basically that's the solution, to employ someone to be the compliance officer. Alternatively, if you have one of the partners who does not want to get involved into the onboarding, I mean, you might decide to employ a senior official, get the senior official PQ'd as being part of the 4 eyes principle or the onboarding process, and have the second partner being the compliance officer. What's important is that the compliance officer cannot be client-facing. Onboarding, and as I believe Stephanie said before, they can be consulted on compliance issues, but they cannot be the persons taking the final decision. You cannot mark your own homework unless you are under threshold, and with that you have low risk and limited clients. That's what we're saying.
Thank you. One question with respect to the source of wealth. We have the last 4 questions here. Does the source of wealth section in the PQ need to be completed for an under threshold Class B applicant? Furthermore, is an audited statement of wealth also required?
Okay, so the source of wealth has to be completed. Basically, the PQ has to be completed in its entirety. Obviously, if you have an individual, you cannot have an entity assessment. You're not going to do your own assessment, you know, in that case. I mean, you're applying, you're the only person and you're doing an assessment on yourself. I mean, it's very unlikely. I mean, the audited, that's on a risk-based approach. At the moment, in order to submit the PQ, you need to attach something. So what we attach, if you're an individual, attach a blank page and just say not applicable for entity assessment, individual applicant. For the others, the source of wealth and the audited statement, that is something that we will ask you during our processing, but you don't need to submit it at this stage. If it does not let you to submit the PQ, and I'm very sorry personally, I've never submitted the PQ, so I don't know. I'm familiar with what needs to be done, but not with the system. So just do a blank page, upload, say not applicable, upload it, and as I say to my team, basically, we want to have this, especially this process of application, as open as possible. You'll be hearing from us through the chat box. Some people are already hearing from us. So if we need it, we will give you enough time to get it done, but it will be on a risk-based approach, and it will be at the prerogative of the authority. Obviously, we have the right to ask for it, but at the moment, you don't need to submit it by the 16th of May.
Thank you. Speaking of threshold B, listen, if a company or a CSP is classified as a Class B, can this client though handle, for example, updates on the memorandum and articles, or advise the client on corporate matters or on share transfer? Can they still provide this service?
Okay, so if we are talking about individuals, so let's say it's a lawyer and they want to draft an M&A. The drafting of the M&A is not a regulated activity, but the submission to the MBR and the incorporation is. So what I'm saying is that if you have a Class B under threshold and you want to help someone, or you want to provide the service of drafting an M&A, then in that case, you can do it. With respect to share transfer, we've had some interesting questions this week. It depends what you mean. If you mean that you are submitting changes to the MBR, those might be deemed to be CSP activities. However, if it's just drafting agreements, that's no, and giving advice. Obviously, if you're a company, then you will be Class B over threshold. The M&A will have to reflect that you're offering these services as well.
Thank you. The last two questions, Alison. If we are offering directorships and company secretary, and of course we are employed within a company and offer this as a service, right? Is this concept for the individual? Is this and for the company? So both scenarios. Is this considered as a way of employment or by way of business?
Okay, it's a bit of a situation. So if you have someone, so let's say there's a company, these are not CSPs. So it's a normal trading company, and they have different subsidiaries, and part of your employment contract says that you have to be a director on these companies. That is directorship as part of your employment. So you don't need a license. And if the company is doing subsidiaries, they don't need a license. The licensing kicks in when you are servicing third party. So you are providing the service to a third party and getting remunerated for it, and you're holding yourself out. In the case of CSPs, this is their job, basically, providing the services to third parties, holding themselves out, etc. So in that case, the CSP who has a license, and then I have, let's say I'm the CSP, I am authorized class C, and or a class B over threshold as a CSP, and I have 10 employees. So these 10 employees all each have 3 directorships in client companies that I am servicing as a CSP. So they are the clients of the CSP, but the directorship of these clients is being done by the individual employees. In that case, the CSP needs a license, the employees no, as long as the employees are limiting the directorship activity to as part of their employment, to their employer. So you cannot tell me that another CSP, I am employed with CSPA, but CSPX approaches me to be a director. I am not employed with CSPX. So if I am offering directorship to client companies of CSPX, I need a license. But I am employed with CSPA and I offer directorship to clients of CSPA, then I don't need employment. Sorry, I don't need authorization. I was going to add employment, it could be part-time or full-time. We don't distinguish, so it's not like, but then not consultancy. Let's, the creative ones where we have consultancy, we'll look into them individually, so.
Exactly. One last question. This is of course was already tackled. I mean, here someone is asking whether we can get guidance from the authority on a case-by-case basis on what the requirements will be. I mean,
requirements of the ongoing obligations.
Yes, on a case-by-case basis. I mean, they should reach to you. I mean, to really know what exactly is the case.
Okay, basically we're receiving an enormous amount of queries about whether they need authorization or no. For those of you that have emailed us as from last Monday, you will notice that our automated reply is, please apply. We will not be able to manage to do an assessment before the 16th of May. So what we're saying is that for those in part of the transitionary that are not sure whether they need an application or not, they should apply. With respect to the ongoing obligations, I mean, we plan on having more webinars, having more, outreach. And the issue with respect to obligations, first of all, I mean, there is the rule book. So please do have a read of the rule book. And it hurts me when somebody tells me, oh, I don't have time to read it. You know, I've had that many times. So, I mean, we dedicated a lot of time. As mentioned earlier, we have issued by way of business guidance notes. We have so many planned this year as well with respect to ongoing. So we do plan to have these ongoing guidance notes on what needs to be done. If you need to approach us personally, I mean, please do. We always answer any queries. It might take some time. At the moment, we were on a 7 working day turnaround time. I mean, we're not coping because of the amount. And unfortunately, it's not just the amount of queries, it's the toing and froing because applicants are not saying, how can I say, not the whole truth. They're not lying. They're like withholding certain things. And the issue of disassociation letters, because then when we do the checks, we're like, somebody tells me like, I have 2 directorships, we do some checks and we find 20. So obviously that takes a lot of to and froing, which is making it difficult to make all these assessments. So please do reach out. I mean, we have a dedicated team that is working on this full time and more. So, but obviously the ongoing obligations, we expect at least the license holders to have a read. I mean, or at least their compliance officers to have a read. I mean.
Very good. Thank you, Alison. Thank you all the other panelists. It was an interesting session indeed. There were other questions in relation to the recording of the session. Yes, as I said earlier, the session has been recorded and will be soon available. We will let you know when this will be uploaded. So thanks, thank you once again for joining us, and thanks again the panelists for their insights. Have a nice afternoon.
Thank you very much. Thank you.
Thank you, everyone. Bye. Thank you.
Bye.